What about capex? I mean, you do own industrial companies or capex-related companies. For 2-3 years, we've been waiting. Not much has happened. I mean, very recently, the largest infrastructure company, L&T, came out and said that we are not going to grow our order book at all, perhaps this year. Does that worry you, or do you think that very soon the capex cycle will start turning around?
I see it, again, very difficult for the capex cycle to revive, again, in the context of growth, which I just talked about earlier, in terms of overcapacity in a number of different sectors, and significantly low business and consumer confidence. So these are the three drivers of corporate capex, and I don't see any revival on these fronts.
So how do you play India then? I mean, is your positioning going to be fairly defensive in the light of the view that you just articulated? I mean, stay with utilities, because I know you've got a constructive view on gas, the gas stocks in India.
Yes, so we like businesses which have a strong domestic competitive advantage, have an opportunity to grow irrespective of some of the weakening macro trends. So we like such businesses. Utility stocks, such as gas stocks in India, they fulfill a need of fulfilling the domestic demand. India has a serious energy problem, as we are all aware. So we like such businesses that are as much insulated from global trends.
What is the global picture looking like? Because, it's not just India. Many markets have done even better than India over the last 12 months. And volatility has been so low, people have almost forgotten that markets can be volatile. Do you suspect that this may not continue for very, very much longer?
I think it's a fair possibility, because what has happened is, over the last 4 or 5 years, ever since you had a very loose monetary policy, there's significant amount of inflows to equity markets. I mean, here are some interesting statistics. More than $250 billion have come into emerging markets ever since Fed has a very loose monetary policy. So my opinion is that volatility is likely to increase as interest rates do kind of gradually rise in the developed world, and US is reaching full employment and pretty much reaching its output gap. So some amount of volatility has to rise in that context.
What could trigger it? Because, people talk about geopolitics, but that's not predictable. Do you think there is something which is other than geopolitics which can trigger this volatility in markets? Because this fact about interest rates going up is well known for the stock market. It won't come as a surprise. Or are we going to be surprised by the speed of it, you think?
I mean, the indicators we are closely watching is inflation in US, output gap in US, because that will result in Fed taking a much more aggressive view than it was earlier. So I think these are the 2-3 indicators which we are closely watching. I mean, the good part is inflation still is very much under control in US, because productivity is rising faster. If you look at the unit labor costs, very much under control. So that's kind of positive, and that could result in, if inflation is benign, then interest rates don't really go up, and that can result in equity markets actually doing reasonably well globally and within India.
But do you suspect that there is complacency today in the way, not just in India, but globally, the way investors are approaching equities?
Yes, absolutely. There's a fair amount of complacency in stock prices, whether it is in India or in US for that matter. So as investors, we need to be increasingly more prudent, given how well markets have done everywhere.
What about earnings? In India, 3 years, we've had hardly any earnings growth. Every year we start saying that this time we will have a pickup. But again, we have had another quarter where we've stuck with middle single digits earnings growth. Do you think it's predictable when our earnings turnaround actually happens after going wrong for 3 years or so?
Earnings are a function of GDP growth. So if one takes a view like GDP growth is much more slower, or we are in a period of low growth environment, then corporate earnings will continue to disappoint.
The other thing which investors talk about in the Indian context is macro stability. Our macro was looking much better, but over the last few weeks, crude has started moving higher. Some of the policies seem to indicate that fiscal deficit might also be under pressure. It looks increasingly uncertain that RBI will be able to cut rates much more. Are you getting, on the margin, a bit worried about Indian macro?
Yes. One of the things that worries me is likelihood of increasing current account deficits back in India. The recent trade numbers are not good. If you look at in the last 3 years, in spite of government making a big push towards Make in India and some of the other initiatives, our trade deficit with China is actually doubled in the last 3 years. So what it tells me is, India is becoming significantly less competitive to China and some of the other countries who've actually taken market share for Indian products. And that again is a function of maybe massive underinvestment in infrastructure or some of the other issues that have been happening. And we know what exactly happened in 2013 when current account deficit in India went up significantly. So that is something one worries about. Obviously, oil is a wild card. But given some of the technological innovations that have happened in shale, it's unlikely that oil again goes back to 100 kind of ranges, but you could be in a choppy environment.
You speak about exports. In India, people don't focus on that so much. I mean, the view is that we are not an export economy. But do you think that's a big problem? Because the world is seeing a cyclical recovery, whether it's the US or Europe. But India's sort of not benefiting from it because we are not plugged in, or we've not been able to actually plug ourselves into the export market very effectively.
I disagree. I think India is much more dependent on exports than commonly perceived. I mean, this is something policymakers have not well thought about. But I mean, if you look at the big growth drivers, 2003, 2007, or from 2000 in some sense, a lot was due to the technology sector. I mean, the indirect impact of technology was effectively the game changer for India's economy. I mean, if my numbers are ballpark right, I think the software sector pays about, $75–80 billion in wages in India, and that's the largest private sector wage creator in the country. So that's the transmission mechanism works from exports to a domestic economy, and if the software and the pharma sector slows, it has a disproportionate impact in other sectors of India's economy.
Do you think that's the way through which consumption, which is India's biggest theme, can start to get a bit challenged? The fact that, I mean, I read recently that the telecom sector has dropped 75,000 jobs over the last year. You're saying IT, the job creation machine is sputtering. It's not happening in pharmaceuticals. Both organized and unorganized, do you think the fact that the job market is becoming so tight could actually hurt the consumption theme?
Yes, absolutely. I mean, it's been India's biggest challenge, and I think this challenge continues. I was reading this interesting statistics that in 10 years, India will have more than, I think, 600 or 700 million people who will be in the working age group who are looking for jobs. So not only is that impacts consumption, but it will bring about a huge amount of social issues that can impact a lot of other sectors in India's economy, which is not well understood.
And what about this other big theme, given the policy thrust of the last year or so, the fact that unorganized India will switch to a transition into organized India? What does that entail for the market in your eyes?
Well, that's the consensus opinion. Look, organized sector will keep taking market share from unorganized sector. But I think it's unsustainable because India, unlike other emerging markets, we don't have safety nets in place. So, whenever you have structural reforms in certain countries, a lot of safety nets, you have unemployment insurance, you have health insurance, and so on. But we don't have such issues. So, you cannot have one part of just the stock market benefiting disproportionately from market share gains, but what happens to these unorganized sector? I mean, who creates them jobs? What happens to them? So these are some of the issues which are not well understood, but I think if they lose jobs, how will corporate earnings continue to grow?
You alluded to the electoral cycle. We are again coming to the busy season out there, full of elections the next 12 months, then a big Lok Sabha election. How do you see this next 1 year panning out, given that the government's focus will now turn to winning another election?
I mean, on one hand, you could argue it should be positive because, typically last year of elections, typically the year before elections, there has been pretty much a fiscal boost in most of emerging markets as politicians try to kind of speed up some of the initiatives they want to do. So in a way, that should be good, and maybe there is positive out of it. On the negative side, this also results in significant amount of volatility in stock prices, but that's not important. It also results in businesses also actually stopping their investment cycle because they increasingly worry about, well, who's going to run the country for the next 4 or 5 years? Do we see continuity or change in policy? So it has both positive and negative connotations in the last year of elections.
How would you sum up your mental frame right now? Optimistic, bullish, cautious? How would you sum up your stance today?
Prudent.
That is always, I'm sure, always the case, prudent. But are you more cautious or more bullish, you would say?
I mean, we are, our India weighting is in line with benchmarks. So, but again, at a certain, if the prices are right, one should be more aggressive about our investments. But given the context of some of the issues we talked about, I would say I'm more prudent. I'm much more defensive in my positioning.
Amit Bhartia, always a pleasure. Thank you very much for your time today.